Welcome everybody. Welcome to the Chief Risk Officers Roundtable, at which we will map the challenges lying ahead of the banking sector over the next 3 years. First of all, I would like to warmly welcome the experts that were kind to accept the invitations for the debate. Let me welcome in the alphabetical order Mariusz Cholewa, Chief Executive Officer of Biuro Informacji Kredytowej, Aleksander Fleischmann, General Director at Raiffeisen International Branch Poland, Piotr Mazur, Chief Risk Officer of PKO Bank Polski, Paweł Preuss, Financial Sector Leader of EY Polska, Barbara Sobala, Chief Risk Officer of Citibank Handlowy w Warszawie, and Przemysław Szczygielski, Financial Services Leader, Deloitte Poland. To conclude the round, I would like to thank to the organizers, the European Financial Congress, for entrusting me the role of the moderator of this panel. The aim of the debate is to identify the key risks in the banking sector in Poland and to sketch the map of upcoming challenges. Due to the great uncertainty resulting from not fully materialized yet economic effects of the lockdown of the economy and the fight against the pandemic, the discussion in the debate is primarily aimed at identifying threats to the stability of the banking system in Poland and indicating the right directions of actions necessary for the banking sector to maintain its ability to support the economy. The discussions we have held with the representatives of the banking sector in charge of the risk management areas will shape the tone of the debate. The following are 5 areas that were identified as key challenges. First of all, loan portfolio quality and the outlook for loan loss provisioning. Then developing issues with consumer protection and legal aspects on the consumer protection front. Banking sector profitability and business model. Cyber risks in the world of COVID-19. And the efficiency of the credit processes. As you see, the trends focus not only on the risks associated with the economic effects of the pandemic, but also on the problems of the banking sector that already existed, but were not yet resolved before the outbreak of the pandemic. Conclusions from this roundtable, from the European Financial Congress Risk Roundtable, will be an input into the banking CEOs roundtable on the challenges facing the banking sector, along with the outputs from the technology and economic roundtables. And then I would like to ask experts in the panel to provide their receipts for the Polish banking sector and how to maintain its ability to support the economy weakened by the economic crisis, by the pandemic and its earlier problems. So let's start with the most pressing issue, that is the loans portfolio quality and LLPs. As we have seen, the outbreak of the pandemic determines new threats to the stability of the banking sector through the economic crisis resulting in the deterioration of the loan portfolio quality and an increase of the loan loss provisioning, in particular considering procyclicality of IFRS 9 requirements and upcoming expiration of the government subsidies. So the first question would go to Barbara Sobala. What's your outlook on the development of the banking sector loan quality?
Good morning, good afternoon. I understand that now you can hear me. I think that the coming time is really very difficult for us because as first we should think about liquidity on our side and on our customer side. Also, we also should think that now all clients try to be transformed very quickly into digital form, and this is correlated very closely with cyber security. Also, currently we have very low rates, so in the future we also would have higher costs for current credit. So from that perspective, I think that many challenges would be in front of banking sector, but still we have to think that MREL is in front of us. So it may be from different angle, we will see many challenges.
Okay, and specifically on the quality of the credit portfolio in the economy, what are your views on that? Barbara, we cannot hear you. You are on mute. Okay, it seems we are experiencing a bit of technical troubles. So I will pass on to the next question to Mariusz. Which type of dynamics do you see now in the retail and micro client portfolios, and from the perspective of the credit bureau? And since you are also having a perspective of the international credit bureaus, heading the international association, are Polish experiences any different than those from the other markets?
Thank you, Marek, for the invitation and for this question. As for the new booking is concerned, we see much lower new production of every kind of loans in Poland. This is the similar situation in European countries. We see the new booking lower between 30–40% lower than the year before, with two exceptions. One is the installment loans, and in that product we see year-on-year 2% growth. This is probably due to the businesses moving to the e-commerce, and we see this product is with the lower risk, and then demand is much higher. And the second product with the lower, still negative, but the lower negative dynamic, 4% year-over-year, is mortgage loans. But this is only due to the big tickets above 350K, which covers 42% of the portfolio of the new booking, and it looks like the demand is in the big cities, in the big tickets. Usually the big tickets are correlated with the higher risk. So this is the area when banks should be careful. But we do not see the big increase on default rates, neither on the Polish markets and the European market as well. We produce on the monthly basis the BIK risk indexes, which shows actually some kind of the cost of credit for different product segments, industries, etc. And we saw till June, even July, the increase. But after that, we showed the increase of new defaults. And now, the last months, we have the lowest results ever. I spoke with my colleagues from other European credit bureaus, and they see the same situation. They do not see the big increase so far on the NPLs. However, this is probably the two reasons. One is the private and the public moratoria, the extension of the credits, and the second, the public support. So actually, everyone is expecting that the defaults will come. So we see that the problem will arise. We see as the credit bureaus also the bigger demands for early detections tools. So this is the area where the banks are trying to find some early warning signals where the problem may arise firstly. Thank you.
Okay, thanks a lot. Very insightful. So it seems that the defaults are not visible, not because they are not there, but simply because they are well hidden through the different holidays and and moratoria.
Right.
And the worst is ahead of us. The next one would then go to Przemek Szczygierski with respect to the accounting view on that. In your view, does IFRS 9 pro-cyclical requirements help banks in presenting the uncertainty of the economic losses caused by ways implemented to find the pandemic, or it's actually creating more problems with respect to the presentation of the results for the months to come?
Yeah, I would say that in general, IFRS 9 was designed to reflect provisions and the credit risk in books. So whether the pro-cyclical or anti-cyclical approach is, I would say, the next question. But what we currently see is a huge issue with really, estimating in comparable manner across the market the risk associated to every single portfolio. That's exactly what Mariusz said. One issue is that IFRS 9 is like general guidelines bringing us general rules, and we already have to live with it and to stay with it. But additionally, the new reality and the moratoria brings the situation that we are not ready to really implement easily. And currently, we have to discuss and agree how, in consistent manner across the market, treat this situation, because the risk is unclear. It's somewhere here, but it's not easily measurable. So that's one of the biggest questions, I believe, and biggest challenges currently we have. So IFRS 9 itself brings some kind of uncertainty and uncomparability, but additionally, the new situation on the top brings us some additional risk.
Okay, many thanks. Then I will slowly move to the next section of the 5 items menu that we have in front of us. That is consumer protection, and I will start with the biggest elephant in the room of Polish banking sector. That is the Swiss franc portfolio issue. While unresolved issue of the Swiss franc loan portfolio already casts shadow over the Polish banking sector and its ability to support the economy, new developments in the field of consumer protection, things like abusive clauses in the customer contracts, reference rate, transition uncertainty, pose additional emerging operational risk for the banking sector. So as I said, starting with the Swiss franc mortgage loans, question would go to Alexander Fleischmann. It is pretty clear that Swiss mortgages in Poland generate one of the biggest issues for the banks that granted them. From your perspective, how to manage long-term credit risk in such a rapidly changing world, and what are the risks faced by the banks that are used to grant those loans? How do you
Good afternoon, everybody. I hope you can hear me well. Talking about the risk of the FX portfolio, the mortgage portfolio, we need to distinguish here two categories of risk. The one is the business or credit risk, and the other one is the legal uncertainty, the legal risk. And let me be quite clear on the credit risk. These products are doing absolutely fine. They are amongst the best products we have in the market. Let's understand that the FX portfolio, the FX mortgage portfolio, is performing even better from a risk perspective than the normal zloty mortgages. And even now they seem to have been vaccinated before the COVID crisis, I must say, because despite the fact that we have issued about 15% of the portfolio in terms of moratoria, they all, or the majority of them, came already back out of the moratoria. And what we see is that the customers started repaying again, and it's not seen as a big credit risk at the moment, despite the fact that we were quite afraid of this factor before the crisis, or when the crisis started, the COVID crisis. Now, let me come to describing a little bit the legal risk and the legal uncertainty. And here, let's be very clear. We always call it a legal uncertainty, but the legal risk comes not from the legal point, and less to effect of the quote-unquote well-known use of abusive clauses. It's more an issue that has to do with the exchange rates. We have two sorts in our bank. We have two groups of customers, or two categories. We have the Swiss franc loans, and we have the euro loans. Both of these loans have the same clauses. The majority, or in fact exclusively, the lawsuits that we are facing are coming from the Swiss franc side, and is predominantly because of the unfavorable exchange rate, or the development of the unfavorable exchange rate that happened in the Swiss franc environment, whereas the euro remained quite stable over the time, and therefore there is no such an issue, such a risk at the moment visible. So it's less a question whether banks have used in the past abusive clauses or not, or whatever has to be seen as an abusive clause. The question is much more, how do the factors that are influenced by these clauses develop, and whether customers see this as a negative effect. In an extreme environment, if we continue thinking through what is currently happening in the market, especially, I wouldn't even call it the market, but in the courts, in the courtrooms, if these developments are sustainable, then we are very worried, I must say, and this risk will have in the future devastating effect to the market. We have to be very clear and very outspoken on this topic. If this happens, we made various calculations, we calculated various models, we double-checked it with some of the big four advisor companies, and we found out that it would affect up to, in the worst case scenarios, up to 40% of the equity of the Polish banking sector. I mean, this is massive, and let's face that reality, that such a negative effect will have long-lasting effects also on the Polish economy, on the real economy, because it would hinder dramatically banks from extending loans going forward, helping the real economy out of the COVID crisis and other difficulties that are lying ahead of us, the roadblocks that are lying ahead of us. And one topic I would also like to mention, if the discussion goes on regarding the validity of certain clauses in a contract, like we have it and we see it at the moment, after a period that such contracts have been in place for 12, 15 years, this also would have not just a devastating effect on the performance of the banks, but it also has a quite significantly negative impact on anything that is related, and this is not only restricted to the banking sector, on anything that is related to long-term agreements and the legal certainty to rely on long-term agreements. So any long-term agreement could therefore be questioned after a seriously long amount of time, with the appropriate negative effects if such agreements after such a period of time become annulled.
Thanks a lot. That is actually quite a worrying picture ahead of us. And in this context, ahead of the new developments in the field of customer protection that pose emerging operational risks for the banking sector, we need to conclude that as bankers, we are very good at pricing the risks we know, and we are much less efficient in pricing the risks which are yet unknown to us. So in this context, the question would go to Piotr Mazur of PKOBP, how to price and manage such unknown risks.
Good afternoon. I would say that historically, the credit risk was the number one. It was the most important risk responsible for, I would say, 90% of the losses in the banking sector. But 2020, it was, I would say, special year. And this is the first year in history than the losses connected with the customer protection, in some months was higher than the credit connected with the credit losses. So I think that this is just the beginning of a great career of this risk. And probably I will not make a big mistake to say that no one in the banking sector take this risk into account when pricing the product. And we count, I would say, labor costs, IT costs, offices, credit risk costs. We use BFG, capital cost, but we don't take into account the most serious risk, which are regulatory changes and customer protection. And of course, banks have to find a solution in this situation and try to do the business. But theory of economics says that in the long-term perspective, such conditions for doing business will cause that the banking services will be more expensive and less accessible for the customer. And as a result of these actions, the ultimate victims will be the customer whose rights are protected by the offices. But the most important, I would say that we are not against customer protection. We owe the customer, and we know that this is very important, and we really need it. But the offices and courts, they must act here and now. If we do something wrong, decision must be quick, not after 10 years. And if we have some difference in opinion, then independent court should resolve it quickly. And because on the European Financial Congress, we talk a lot, but I would say we do a little. So my idea is that we would have, some recommendation from our discussion. And my recommendation in this specific and very serious risk would be, let's agree with, regulatory, with everybody. Okay, and we call this 1 year guarantee. It doesn't mean that if customer want to withdraw with this period, then okay, fine. But don't do it, after 10 years. Because if we will come back after 10 years, it will be against our customer, because then the price for the product will hit the ceiling. This is my, I would say, recommendation.
Okay, thanks a lot, Piotr. And then continuing on these operational risks which are upcoming, I would have a question to Paweł Preuss of EY. As one of the major upcoming challenges in the relation bank-client is caused by the interest rate benchmarks redefinition, what are the economic implications from the perspective of the bank and the customer of such a change?
Thank you, Marek. Thank you for inviting me, and thank you for this question. And before I just get into the answer, I want to join Alexander and Piotr in their appeal in terms of the Swiss francs, because I agree with them that I think 2020 was actually different in terms of risks materialized than we expected moving into pandemic. And I can only add one point, that for the banking sector, uncertainty in this completely, I would say, new field doesn't help to build relationships of trust between customers and banks, which ultimately the banks are dependent on. Yeah. So sorry for this side comment, but I thought it's quite important to stress, and I agree we should formulate some recommendations out of this forum as well. So coming back to the actually indexes, reference rates, and the broader LIBOR-VIBOR discussion. yes, it's coming. It's on the top of all the changes that were really mentioned and the challenges that we are facing for a number of financial instruments. LIBOR, and especially Swiss LIBOR, will be non-existent from the 1st January 2022. And I want to stress it because I think understanding of this is not so public and not so broad. And what does it actually mean for those mortgages that pose for us so much legal challenges right now is a major thing. I think there is a light in this tunnel, and the European Commission is bringing the solution for this. And actually, that should be a solution that will be coming from Europe and will really be able to address all the issues of cessation or really of the Swiss LIBOR. And I think there is no space right now to go into much more detail, but I really like everyone interested to refer to national working group on a Swiss benchmarks, really, which are working and bringing the solutions. But actually, in terms of your question, Marek, should we expect any changes in terms of how the interest will be calculated? Yes, it will be completely different way of calculations of interest for, I would say, a lot of especially foreign currency denominated instruments, including mortgages. Yes, that will be different mechanisms, different logic, different actually the way it will be measured. At the same time, customers should feel comfortable in that sense that we do not expect a major change in the level of payments as at the transition date. Yes, I want to stress it. There is no intention, or right now we don't expect the interest rates to be of the different level in the mortgage. So there will be mechanism put forward to how to make it as, I would say, value neutral as possible. But I think there is always devil in details. So that will be something that actually we need to explore and make sure we communicate properly to customers, because I think the biggest risk that we are having is actually that there will be wrong understanding of the change coming. Yes, and that's something I want to stress, because that will be on the top of what we were discussing in terms of the mortgages of the Swiss francs especially. And coming to the banks, yes, the banks have quite a lot to do, because I think LIBOR is naturally with us for more than 30 years, is foundation of how we measure actually risk within the industry. And we will have quite a lot of changes relating to data, to models, actually how we assess the future forecasting, stress testing. So that's coming. And I feel overall, our assessment is that Polish banks are a bit late to design and really put in place their programs. I just remind there is only 13 months from now that especially for Swiss currency, we have a major change. For other currencies, it can be spread over the longer bit of period, but taking into account the size of the book in Swiss franc, I think it's really something the banks should pay more attention right now. So thank you for that.
Thanks a lot, Pavel. Very, very insightful. It is actually another major risks that we see in the portfolio of the sector, given the fact that, as Alexander Freshman said, it's not only related to the credit aspect of that, but it's very much something that comes on the customer relationship and the customer protection front. In particular, in the part of the portfolio that from the customer protection point of view is the most exposed among all the types of loans that we have in the books as the sector. Going to the next big chapter that was highlighted by the experts in anticipation of the debate, that is banking sector profitability and the business model. We need to highlight that the impact of unconventional monetary policy tools, including a drastic reduction of interest rates, on the long-term viability of existing business models, and the risk of spillover of the financial problems of the weakest participants of the market to the rest of the sector, and subdued profitability of the sector is definitely a threat to its long-term viability and its ability to support the real economy. And the decrease in demand for new loans has been significant, as Mariusz have highlighted, and is also seen on the corporate, in particular, investment loan side. And this is all happening despite the unprecedented fiscal stimulus. So let's bring in here some international perspective. And the first question in that section would go to Mrs. Sobala. From a perspective of a financial institution which is active in over 160 countries globally, what are the biggest challenges for the Polish banking sector profitability, its business model, and long-term ability to support the economy?
Thank you, and I hope that now you can hear me. And this is the real challenge, that our industry started to be as low profitable as it wasn't in the history. I can remind that a few years ago, even in 2019, ROE was around 7.8 in European Union. In case then in Poland, it is close to 3.3%. ROE is lower and lower, and it means that we are not interested investment for foreign partners, and especially that we have MREL in front of us. It would be really difficult to attract investments in Polish sector. And I think that one of the suggestions which we should have in such a situation, that some taxes which we currently have should be tax deductible. Without this, our profitability would be lower and lower. So I think that in front of us are discussion with Ministry of Finance and to present that if we should think about MREL implementation and to be interested for other partners, we should think how we can improve our profitability. And as I said, I think that it would be good if banking tax or part of BFG could be as a tax deductible.
Okay, many thanks for that. Then the next one, also on the international front, I have for Alexander Fleischmann. From a perspective of a bank active in a number of countries in the region, how do you see the risks and the rewards of the Polish banking sector? How attractive it seems for a regional player? And what would you recommend for Poland going forward in order to, let's say, reshape the situation?
Before I answer your question, I want to just ask a question and post a question to all of us. And this is, what is the Polish banking sector? What is the sector in fact facing, and what is ahead of us? And I think there's three major mammoth tasks that is expected from us that we have to support as a sector. Number one is we need to help the economy. We need to help the state post the COVID situation, post the crisis, to help and support the business. This is number one. Number two, also a customer topic is, we know that also the EU is expecting a certain transformation, the Green Deal. A lot of investments have to follow, also with state investments in managing this transformation. Number three, the banks themselves have to invest a lot to be ready for the future and to be ready for the digital transformation. And we all know, and we have all seen now in the lockdowns during the pandemic, how dependent customers have been on using the digital channels, and we have to exploit and also increase and improve the digital offer from all our sides, which requires a huge investment from the bank side. So all in all, there's a lot that comes upon us, where a big reliance is on us on what we have to do going forward as a bank. Now, when I look at the profitability of the banks as such, I see four major topics that have some negative effect on the climate, on the investment climate in Poland. Number one, the profitability of the Polish banks are hurt by, as we just discussed, the Swiss franc topic, which should not be underestimated in its severity and what it would mean to the capital position of all the banks altogether. So this is, for me, number one. Number two, we all know with the reduction of the interest rates, we have seen that the margins, especially the margins on the existing business, the business that we have on our books, was coming down, has been reduced. So this is something because of the contractual obligations we have with our customers, we cannot change from one day to the other. So even if we increase the prices for new business, it will take a long time until the new business starts generating profits again. Number three, let's face the reality, we do not have the best regulatory environment in terms of supporting the banking sector. And with that, I don't mean KNF. I'm talking here about especially the consumer protection part. Of course, we need to be protecting the consumers, and we need to be a fair partner for our consumers. But what I see, what is going on in this area at the moment, how banks are being pushed into the corner of being the bad kids on the block, so to say. I don't think this is what we deserve, especially in having shown, for example, the dedication towards our clients now during the Corona crisis and during the phase of providing moratoria, etc. And last but not least, let's face it, we have one of the highest banking taxes in Europe that we still have to manage and still have to handle somehow, and that eats away some of the profits we have. So looking at all of this, there is two aspects I think that need to be fixed. Number one is the aspect that the banks by itself, being less and less profitable, will not be able to produce enough profits to strengthen their capital base, which is required to support the three things I mentioned in the beginning, i.e. the things that we need to face and we need to support in the years to come. Number two, it will also be extremely difficult with such a low profitability to find investors investing in the banks, investing in the economy, if the profitability or the outlook for the profitability is so extremely low. And that altogether will not hurt the large corporations. The large corporations will be very fine. Those who are dependent on the banks are the small, medium enterprises. And this is the ones who potentially will suffer going forward if there is a shortage of loans, if there is a blockage because the banks cannot afford to disperse further loans and grow their balance sheets because they do not have a capital to do so. So what we have to do is we need to find a stable environment under which we either can retain, as our colleague from Citibank already said, to retain certain profits and profitability, to extend the capital position of the banks again, not threaten it by the means of, for example, the Swiss franc Damocles sword above our head, so that the banks are in a position to support, in fact, these three topics I mentioned in the beginning.
Many thanks. It's very well structured and very insightful. It's actually a Herculean challenge that is in front of the banking sector in Poland, not only in front of the banking sector standalone, but also all the elements of the regulatory and consumer protection ecosystem that work with us hand in hand. Last question from the list of the chapters on banking sector profitability and business models to Mariusz Cholewa from an international perspective of the Association of Consumer Credit Information Suppliers, that you are also the Chief Executive Officer. What are the weakest spots and strengths of Polish bank retail loans and when you compare it with the other markets, and what the Polish banks should be aware of or beware of in the retail loan books.
Okay, thank you, Marek. U.S. credit bureaus some time ago did an analysis about the credit score, how it evolves during the time period, and what they showed that during the hard lockdown, the customers who got the consumer loan were with lower and weaker credit scores. And after when the hard lockdown ends, it recovered to the previous levels. We checked whether in Poland it was the same situation or maybe different, and it actually flies like that in the US example. So it shows that during the hard lockdown, the new booking of cash loans were delivered to clients with the lower risks, lower scores, which means higher risk. We also checked the approval rates, which before the lockdown was at the level of 56% for commercial banks in Poland, a little bit higher in cooperative banks. But during the lockdown, it slowed down to 53%. But after the lockdown, it recovers. And now it's at the level before the lockdown. But what we see also that the banks focused on own clients. So it means that the approval rates with clients with BIK scores, the top levels, was at the level 70-75% even, and it was stable during the crisis this year. But what we saw also that the big decrease of approval rates with the persons with weaker scores. Usually it was low at the level of 14%, 15%, but during the lockdown it was down to 5% and it didn't recover. So it shows that banks concentrate on the good clients, which is good. But what worries me is the tenor extension of new loans, which in October was at the highest ever rate, and it was 49 months. I haven't seen such a big tenor. Average ticket cash loan unsecured 49 months. 36% of new cash loans is with the tenor above 7 years. Usually, the longer tenor correlates with high tickets and high risk. This is, in my opinion, the potential area of increasing the credit risk in the future. And the second actually is the question mark about the cooperative banks. But because during the crisis, the cooperative banks, they are gaining market share. So it's a little bit strange. Usually, when cooperative banks concentrates on their own portfolio and in small cities or villages, that's fine. But usually when the cooperative banks trying to get the bigger market share, especially in the bigger cities, it correlates with higher risk. This is the question mark. And of course, we see what was mentioned before. During the crisis, the fraudsters are much more active. So there is a huge demand from banks on anti-fraud and the cybersecurity solutions. It's similar in Poland and in other markets as well. But in the end, I would like to mention that the last year we had the discussion, and it was mentioned by Piotr Mazur, that maybe we can do in Poland that some reporting we can transfer from banks to BAK, for example. Because we are in BAK, we saw all production from all banks in Poland, and we can transform it into anonymized database and provide the KNF with certain statistics. And when we discussed it last year, I can say that it's done. We are doing this. For some data, it was required that we need the bank's consent, but it was delivered. I saw that this is our involvement in the stability of the financial sector, and I must say that this is unique at the global level. So usually the private credit bureaus do not provide the regulator and the supervisors with such a statistic. So thank you for such an inspiration.
Okay, so as Piotr was saying, we are not only talking about solutions, but also delivering them, and that one is a great example. I would like to continue a little bit on that line that Mariusz highlighted, as during the COVID pandemic, not only bankers moved to the home offices, but also criminals did as well. And in this context, Piotr, what are the new emerging threats on the cyber risk front that you see for the sector?
Well, I would say that there is probably no, any special threats and any new special threats in this area. But the problem is that there is, more intensive. And, I would like to start by diagnosing why we hear about the cyber risk more often during the pandemic. And I think that this is, due to the more customer with no experience start to use electronic banking. And, I heard that someone did research on the market and to try to check how many customers are willing to provide banking credentials for the opportunity to win a small amount in the competition. And the result was amazing. Nearly 70% were willing to share banking credentials. It means that if criminals are smart, they can get the key to the banking accounts of many customers. And as long as the money doesn't leave the Polish banking sector, I think that we have chance to save customer money. And this is why I think that this, proposal presented by KIR and ZBP to use the KIR infrastructure and resources for sectoral AML purpose, I think so. This is a great idea, in this difficult time, and we could use this infrastructure as well for the cyber risk area. And as I mentioned, until the money is in the banking sector, we are, I would say, ready to reduce the losses, connected with the cyber risk. And as Mariusz said 1 year ago, when during the panel we, I would say, agreed, and it was good support from KNF, that that there will be transfer information from the credit bureau to KNF, and it was really happened. I think so. It's very good that we did it. So. My recommendation in this area, if we could sum up this risk, I would say to extend, this sectoral AML for the cyber risk and try to control the money, how it's going between different accounts in different banks. We should, I would say, spend more money for the customer education, and because this, I would say, impossible to completely eliminate this risk, I would, support to introduce on the large scale the insurance against this risk. So it would be my recommendation in this area. Thank you very much.
Thanks a lot, Piotr. And I have to say that through your elaborate answer, you have already answered as well one of the questions that were coming from the audience, and we will take a few more questions from the audience at the end of the panel. The last question from the chapter on cyber risk I will dedicate to Paweł Preuss. While the whole world moved to the new remote or hybrid ways of working, in your view, are banks doing enough to beef up the cyber risk mitigation tools? So to follow up a little bit on what Piotr was saying.
Thank you, Marek, for this question. And again, I have a pleasure to talk after Piotr, and I cannot more than concur with his recommendation. Actually, I think it's really AML, KYC, financial crime, and cyber are quite natural areas where we could do industry initiatives, utility type. I mean, these are the areas where the banks do not compete against each other. So it's really quite interesting to explore it in more depth. Especially on financial crime, it won't be that easy because we know this is actually coming across borders even more. So it would really involve some more collaboration across countries as well as a next step. But coming, Marek, to your question on how the banks are faring actually with the challenge right now with the COVID and increased number actually of the digital interactions, I think the answer is it varies. Yeah, I mean, all flavor is it varies by institution. I think clearly the ones that have invested quite a lot before pandemic in digital transformation, in new way of collaborating with clients who are much farther on this journey, and this is mostly the bigger institutions. They were much better prepared. And of course, initially it was a bit of the operational challenge to face it across the first weeks, probably a month. But I mean, from our discussions with clients, I think it was really addressed in a proper way. Yeah, all of the flow of transaction has increased significantly, or all of the number of potential attacks have increased as well. Yeah, I think I'm worried about smaller institutions. I think we were rising cooperative banks. I think it was really discussed by Mr. Choleva that they are moving and take into new areas. They are really accepting risks where potentially the other institutions are not eager to accept. Yeah, so that's something we should have on our mind, whether they are really ready to accept those risks. Yeah, so I would be, I mean, stressing this point. And of course, the spill-off effects could be on the whole system. Yes, and actually cyber is that kind of a risk. You don't want to have any meaningful institution to be exposed, because the reputational risk and spillover effects for other banks will follow. Yeah, so I think that then actually the initiative to help the smaller would make much sense, because actually the bigger institutions are protecting themselves as well to some extent, if I can say so. Yeah, in investment. In terms of what banks should focus on, yeah, because Marek, cyber was at the top of our really risk agenda that the CROs and board members were really putting each year for last 3 years. You remember you were a member of IAF, actually at our conferences, one of the Polish CROs invited to see our 2019 results. And that was the third year in a row when cyber was at the top, and even before pandemic. So I think with digital transformation, with the speed of actually new technology adoption, it will only come stronger and stronger. So I think we still are learning how to address it as an industry. Across all industries, I think we are really well prepared. I think we have a pleasure to work with Polish institutions that are really at the forefront, not only from the local, but as well international perspective on how to address it, how to incorporate cyber risk into the broader risk governance. I think how to measure cyber in order to be able to take wise decisions, which initiatives actually to promote and which probably to wait a month, a quarter longer. Yes, I think that the major shift needs to be made as well in the perspective within the banks. Cyber shouldn't be seen as a risk mitigation, as a compliance exercise. The more it comes to the forefront, is actually a part of any meaningful digital transformation project, I think the better. Yeah, if it's coming later, then it might be unfortunately too late. Thank you.
Okay, thanks for that. And on this one, I will swiftly move to the last set of questions that were already hinted by Paweł now in his last speech, and by Alex Fleischmann when we were talking about the digital transformation. Let's look into the digital transformation of the banks, and in particular the digital transformation of the credit processes. The questions which are ahead of the banking sector is how to take care of our clients in the area of accelerated digital transformation. We see challenges to the existing credit processes posed by remote working and rapid changes in the economic environment. I would like to ask Piotr Mazur, since there is a new book on PKU BP digital transformation from Moneybox to Cloud, could you put in a perspective digital transformation of the credit processes in light of the accelerated digital transformation caused by the pandemic constraints?
Okay, in my opinion, there is four main areas that constitute truly digital transformation. The first one is, digitalization of information obtained from the customer. The second is the machine learning and other advanced analytical techniques. Third is, I would say, cloud, that increase the possibilities to data processing. And the last, digital collection. And I think so, that the Polish banking sector is one of the most advanced in the world. But of course, there is still a lot to do. And I would, jokingly summarize that it will be end of the process when the customer will be able to the debt collection by themselves. I think that in this year there is one champion in digitalization, and I have in mind PFR, the KIR, and the banks who within month created a system to support hundreds Polish companies, and I think that nobody in the history did it in the 1 month. It was really amazing, and I hope we'll see that the time that in the normal lending activities will be able to use the access to the ZUS and Urząd Skarbowy database, of course with the customer contents and for the customer convenience. Because I would say this example, the PFR, I would say, show that if we have access to the information, there is no problem to create a quick and very efficient process. So in this area, I think so that we are, in the very good place. And I would really have no recommendation in this area, or maybe one, that, you know, to have access to the ZUS and Urząd Skarbowy database, because then, if we will have it, it will be good for us and very good for our customer. Thank you very much.
Many thanks, Piotr. Great examples of the recent pandemics. It was super fast indeed. I don't remember any initiative of the sector being implemented from idea to 100% working solution within a month indeed. Now, the last question from my list before we move to the questions from the audience would go to Przemysław Szczygielski. How do you assess Polish banks' credit processes readiness for the new normal, and how they look like when benchmarked with the industry best practices? And in particular, which also overlaps with one of the questions from the audience, are workout tools and strategies prepare for upcoming wave of defaults that we were talking about?
Yeah, thank you, Marek, for this question. And as Deloitte, we performed recently the Deloitte Digital Banking Maturity Study, where we covered almost 40 countries and almost 400 banks. And this study reveals that Polish banks are one of the best in the world, as Piotr Mazur said. So I fully agree with it. But on the other hand, there are a few countries that are ahead of us. So in terms of where we are, yeah, we are digital, we can be proud of it, but there is still place for improvement. The second dimension we have to also stress is that not only where we are is important, but also how fast we can adapt. And it's very important. So we can be proud that within one month, we are able to provide a lot of support to creditors, to people, to companies that need it. But we have also to admit that in many other countries, the banks and the sector did very similar things. So the question is, are we faster and better than others? Are we able to compete with them? And I believe that the answer to the question, can we adapt fast? And are we, adapting, fast to survive? Or let's say on the inverse manner, the companies, the banks that will not be able to, adapt promptly, they will be just simply too slow to adapt and too slow to survive. This is a very important thing, I believe. And till now, we just concentrated on the user experience in terms of, granting loan and services we provided, but the future, and what is very important and was neglected till now, is closing accounts. And to be honest, it was something that we never take care about as a sector, and the workout collection process. So basically, the upcoming time will require a lot of effort and a lot of fast and prompt decisions. Who we want to, put under the, soft collection, under hard collection, what are the decisions? And to be honest, I believe that the sector, as a sector and as advisors, we have a lot of work to do in this area. And there are a few dimensions. One is the technology that is probably not ready to do it in virtual world. And the second thing is that probably in all this complex situation, we will not have enough resources to do everything as we would like to do. So we'll have to decide which things we want to do and which one we want to postpone or give up. And the crucial thing in this context will be the technology that will support us in doing these things or not doing or postponing. So automation will be a key to success, and the time is the essence in this context. So that's my perception. Thank you.
Okay, thanks, Przemysław. And with that, we are a little bit already behind schedule, but still we have a couple of questions from the audience. So I will now do a bit of moderation on this side. There are a couple of the Swiss franc mortgages. One is addressed personally to Alexander Fleischmann. And the question reads that, the risk at least from 2005, what you have proposed in order to mitigate it. And since we are at Swiss franc topics, there is also a question about which of the three proposals to solve the Swiss franc problem submitted by the banking sector last month seems to be the best one. I don't know if you want to take that one as well.
I will try. Let me start with the first one. I think it's a bit of an overstatement to say we knew about the risk already from 2005. I would say every bank offering such product knew about the two aspects of risk related to such a product, i.e. that there is an interest risk, as with every product, as with every loan, and that there is, in this case of an FX loan, also a foreign currency risk. That is clear. None of the banks involved in this business ever considered that the clauses that they have been using, and this is the topic that we are discussing here at the moment in front of the courts, that these clauses will ever be considered abusive, those clauses that we are using in the contract. So we have to distinguish between the risk of the product and the legal risk, the legal uncertainty regarding a contractual relationship with a client. So what have we done as a bank? There was a couple of things we have done. When the situation, the economic situation started deteriorating from the point of view that the FX exchange rate was deteriorating for clients, number one, what we did, to be not dependent on the exchange rate as such from the bank, i.e. with us, we offered the customers long before the respective law was put into place. We offered the customers already an annex that they are able to repay their loans in the foreign currency itself and not in zloty, and that we convert them so that this question of whether there is a spread or an unidentified spread on the exchange rate is mitigated. The second thing we also did is we, in various stages along the contracts, we offered proactively to customers conversions. However, the expectations on the conversions were to such an extent that a potential haircut would have been economically unviable for the bank as a party in the contract. So there was a couple of mitigation factors we did. The second question was related to, I think, the state intervention, right? Was that the second one? Yeah. Now, let me be quite frank and quite clear. Yes, I think an intervention of the authorities is necessary. Why is that? I also would like to explain. What we are seeing at the moment is various aspects. It's not as plain vanilla it's always described for customers to go to the courts. Yes, they go to the courts even in masses at the moment. Nevertheless, we always have to envisage that it's going to be a long-term, I wouldn't even say never-ending, but a very long-term battle between the customers and the banks until the topic is finally resolved. So there is nothing to buy time. It's going to be a painful exercise. The second issue why I believe such an intervention is necessary is if there is a settlement anticipated, such a settlement at the moment is very unlikely, simply because on the one side you have customers who expect an enormous discount from the current open loan amount versus what the banks are able to offer. So the discrepancy between an economically viable settlement offer that the bank could offer and what a customer is backed is so wide that an agreement can never be reached under normal conditions at the moment. Expectations high, economic viability not there. So there is no possibility for settling these cases out of court. And last but not least, there is nobody at the moment there who was supposed to take over any kind of mediation role, because everyone involved in the process, every stakeholder has already taken a certain side. We have those who should take this mediation role, for example, the ombudsman, be it the ombudsman or the financial ombudsman, they should be the parties who mediate between the two parties, between the customers and the banks. They took the side of the customers. They are burned. They are gone from the scene as being considered a mediator because they have taken a side. So there is no one who can mediate between the two parties except for a statutory institution. So in other words, the only way how I think that short time this topic can be resolved is only by a legislative process coming from the state.
Thanks a lot for an extensive answer. That's very detailed way pictures the battle scene.
Sorry?
Many thanks for the very detailed answer that in a very detailed way pictures the battle scene on the Swiss franc mortgages. Then we have a question from the different angle. When we are talking about the rapid market changes, there is a person from the audience that I would like to ask us about the new implementations for social investment tools or platforms and processes what started to be the most popular investment model for the smaller companies. I don't know who wants to take this one. Przemek, would you try?
So, if you could repeat question, sorry. Yeah.
The question is about the new implementations for social investment tools or platforms and processes that started to be the most popular investment model for the smaller companies. So I guess we are having a question on the crowdfunding for small companies.
Yeah. So I believe that generally this is like a future, and this is an issue and competition also. So that this is an area where bank will have to, I would say, enter and understand where they want to play. So I believe that this area will be more and more popular, but also this is an additional kind of services like value-added services that can be extended and broadly understood and broadly adapted by the banking sector. So I don't see it like one area itself that is, changing the world. I would say that there is a lot of functionalities, a lot of additional services and offerings that are currently one by one entering the market area, and we can see a competition between banking and the small startups, and the future is in adapting, and the fast adaptation and implementation, embedding this kind of services into the bank services is the future. Who will be the first one and who will be able to leverage the information that they have will be the winner. So I really believe that this kind of information can be also adapted into a bank services provided by bank services at additional service. And this is just one of examples where the battle will take place. And I believe banks have to adapt quickly, or they can lose to other new entrants, new players. And it's not only about small companies. I believe this is also about, big four GAFA that can enter, and cover some services currently restricted for the banks. But banks can react, has good enough tools, has good enough data. And as we already discussed today, having all this information by banks can win. But the technology and the time is the key factor to succeed.
Okay, many thanks. Then the next one is on what about the green risk? Do you have your toolkit how to evaluate it? Maybe I will take this one by myself. The banking sector is expected to have the toolkit in place very soon. European banking authority guidelines are asking the banks to incorporate the ESG framework into the decision-making process for all the credit underwriting starting from the next year. And we are supposed to have a quite detailed framework in place to evaluate the impact of each and every credit decision from the environmental, social, and governance point of view. And that is actually quite a massive exercise if we consider how complex ESG requirements and frameworks are. But at the end of the day, it's part of the. We are becoming part of the framework that is going to be policing the ESG standards going forward. The way we are now policing on the cyber fronts or on the KYC or anti-money laundering, simply in order to perform the underwriting business in a environmentally and socially responsible way. We have to implement the respective criteria into the credit decision-making processes. And pretty much all the banks, as we speak, are running projects in order to make sure that starting from the next couple of quarters, it's part of the framework. Then there is one question with respect to the deteriorating legal position of the lenders. And the question goes as follows. What about more and more difficult and longer legal collection processes and increasing costs of the collateral's execution due to last legal changes to the civil code? Is any common approach of the banking sector possible here? Piotr, you're going to take this one?
Yeah, I would say that, that the last changes, and it was not only connected with the pandemic, but we observe, this by, last few years, that the banking position in relation to repossess credit is weaker and weaker every year, and specifically now when there is no way, for example, to repossess money from the mortgage loan, because from the legal point of view, this is, I would say, impossible. So the easiest way is to focusing for the the best class customer, where you will have no start this process, and probably everybody is, from the regulatory point of view, they think that they will make favor for the customer, that it will be easier for them. But as I mentioned, on the beginning, it will be in the long-term perspective rather against the customer, because if the banking sector will be not able to repossess money quick and efficient, so the prices will go up, or I would say the accessible credit product for the customer will be lower. So we observe this trend. Probably it will be difficult to stop it, but I don't think so that it will be, I would say, good for our customer.
Okay, thanks a lot. Then we have a question that asks about how Polish banks will address ultra-low interest rates. Is it only the issue of new fees for the clients, and other products investing would be provided? And there is also a question with regard to the long-term interest rate risk on the loan side, in particular on the mortgages, and how banks are getting ready to address this one. Paweł, would you answer to those questions?
Thank you, Marek. Really interesting questions. Yes, because we all know that actually banking models are challenged, I think, across the globe through the low interest rate environment. So I think we have seen in results how much net interest income was lost because of the free changes in interest rates by NBP to support economy. Yeah, so that's probably the single most important impact that we are seeing in a current year, and it would be fully reflected in FY21. So that's actually very relevant, and the banks are really moving in the right direction and get more and more, I would say, non-interest income, provisions, changing their business models. I think we have a great stories of Polish banks really moving into value-added services or opening up their platforms. Yes, but are they already there? No, I think this is just the beginning of a journey. Yeah. So if we look at the composition of the interest income for banking sector, we still have quite low level of non-interest related income in a structure. Yeah. So I think that we are just starting on this journey. Yeah. And I think this is a broader question and maybe a bit philosophical of the nature. What will be the long-term vision of the bank actually? Yeah, where the money will come if we hear from the big banks, Goldman Sachs, of those words, that the low interest rate environment will stay with us for at least 5 years. This is their thinking right now. Yeah. So if they are thinking 2025 is the time to see higher interest rates, we need to really understand this is not just for a couple of months. Yeah. So that's on a business models. Yeah. So clearly the challenge, and actually the smaller institution, the bigger the challenge. Yeah. And in terms of the mortgages, I think that comes to quite interesting perspective that hasn't actually come so much in this discussion. I mean, what about interest rate risk of the mortgages? Yeah, we all know that the Polish customers have benefited, whether in Polish zloty, Swiss franc, euro, from the continuous decline of interest rates over, I would say, our history. I mean, and we continue to have the interest rate characteristic of the mortgage book across the sector that is floating rate denominated. We haven't been that much successful to introduce fixed rate instruments for different reasons, but I think I would end, not to open up it too broadly, that we are still having the task that we need to address, and there were a number of recommendations formulated, and I remember Piotr, Alexander, we had those discussions already. What should be the mortgage product offered to the Pole? Yeah, if we know that the contract is for 15 plus years. Yeah, I think we have come to the conclusion over the years it needs to be zloty. There is little doubt that it needs to be zloty. Whether it should be WIBOR, whether it should be, I would say, a kind of a hybrid, or should be fixed, is the different question. Yeah, and I think it's unanswered question. I think the practical thing that we are seeing in the market, we continue to be probably at the top of the list of the floating rate mortgages across Europe, across globe, and that's exposing us. Maybe right now the scenario of increasing interest rates is very remote. Having said that, this continues to be a risk, and I don't want to be personally in any discussion in 5-10 years not stating this in public as well. Yeah, and I think I have done it a couple of times already. So I think we might have a similar situation in terms of the increasing interest rates in Poland if we are not communicating, educating people enough. Yeah, and even though I have doubts whether there will be not people coming saying, I think the banks should have done more on this agenda. Yeah? So I will stop here. Hopefully that Marek addresses your question.
Yeah, it does. Thanks a lot. And the last one from the question from the audience is, where is, from your perspective, the border between cooperation and competition in risk management at this time, especially? Barbara, would you take this one? How do you look at this?
Yes, thank you. I think that nowadays we mainly should cooperate, because we see that we currently have similar issues, similar problems, and also our clients have similar situations. So our clients, as it was stated during our discussion, should be much better educated, but we also should think how our platforms, our systems, how we can make this as much easy as it is possible to allow our clients to very quickly to adopt to digitalization. So in such situation, we should cooperate, we should share our best practices. And I think that now the whole as an industry should think how we can protect ourselves and how we can protect our clients. So in my view, there is no space for competition just now. As first, we should educate ourselves, clients, and to make sure that we will be much stronger after this crisis. This is my view.
Okay, many thanks. And that concludes the Q&A session from the audience. So I would like to thank everybody for taking time and listening to us. I would like to thanks a lot to all the participants for a very interesting discussion, for accepting the invite and contributing so lively into the very interesting conversation. And I would like to thanks at the very end European Financial Congress for organizing the debate. Thanks a lot.
Thank you.
Thank you. Goodbye.
Bye.
Thank you very much. Bye.
Thank you. Goodbye.